Good morning, all. I, Ranjana Dassharma, Unit Head of Digital Center Thane, along with Anjali Thakur, Product Manager, we welcome you on behalf of HDFC Securities to our webinar on SGB, that is Sovereign Gold Bond. I'm sure everyone is aware about the advantage of SGBs over other gold investment. Like one get an additional interest of 2.5%. There is no capital gain tax. You don't have to bear management expenses as well. Besides all, SGB are issued by RBI on behalf of Government of India, making it a secure investment option. So for more details, over to you, Anjali.
Hello, am I audible now?
Yes, Anjali, you are audible.
Okay, sorry for the delay. Thank you everyone for joining. So today's session is about the sovereign gold bond. As you all are aware about this product, but there are few things which an investor should know why they should invest in sovereign gold bond, and who is the issuer, who are eligible to invest in sovereign gold bond, and what are the basic key features about this investment as a product. Okay. So if you can just see and look at my screen, basically sovereign gold bond is a product which you are buying in day-to-day life. Okay, on your auspicious day like Akshay Tritiya, like on Diwali, you buy sovereign gold bonds, but in the form of physical gold. Why it is different and why it is better to invest in digital gold as compared to physical gold? This whole presentation will explain you minute details about that. Okay, since inception, if you will see in your lifespan of investment as a gold, each and every investor who has their portfolio, they are investing in gold, but not in the digital form but in the physical form. But in 2015 onwards, government has brought and given an opportunity to all the retail investor to invest in the digital gold, hassle free, plus with a additional benefit on that. So in this, the issuer of the sovereign gold bond is RBI. RBI itself is issuing this bond, so there is no risk involved in the investment. So it is a product which you are investing, which is itself a sovereign, which is not backed by sovereign, but ultimately it is a sovereign which you are buying. Second thing is that if you will see in 2015 onwards, the issue price was around to say 2,680 rupees. You got 50 rupees discount on that because government is giving you discount on all the issues 50 rupees. If you will compare to the market rate, additional 50 rupees discount you get on the investment. In 2015, it was 2,680 rupees. And now if you will compare, it is 5,600, which was the last series which was there. Ultimately, it is 140% increment which you are getting. So it is ultimately a beneficial product which you are getting, and addition which you are not going to get in the physical gold. Second thing, sovereign gold bond, every year government issue different tranches, which is series 1, series 2, series 3, series 4. Ultimately, it has different series name, but the product is one and the same. Current series which is going to come from 11th of September, it is series 2 of this financial year 23-24. Secondly, issuer is RBI on behalf of government. All the terms and condition, your certificate, if you're buying in the physical gold or your digital, it is it is parked into your demat account. Okay. Ultimately, it is an issuance which is done for RBI to your demat account. The stock, because you won't be able to buy from RBI, so you have to have some mediator, either example I can give you HDFC Bank or an HDFC Securities if you have a trading terminal. Okay, if you're buying through HDFC Bank, there are two modes in that. It is digital and physical both. But through HSL, it is purely digital mode. We are going to buy at one click. Eligibility, and in retail individual can invest, HUF can invest, trust, university and charitable institution. They can invest in this. Private entity, partnership firm, they are not entitled for this product. Secondly, how much you can buy? From 1 gram, you can buy this product. Maximum it is 4,000 gram for financial year. If suppose 22, 23, 24, you have bought sovereign gold bond in the series 1, 4,000 grams, then you are not eligible for this series which is going to come from 11th onwards. So any customer who has an eligibility, they can invest only till maximum 4,000 gram, not more than that. Secondly, 1 gram 4 kg, it is 4,000 grams. So it is clear that an investor for the financial year, they have a maximum capping which is 4 kg. Okay. This investment which the price is quoted, price is going to get released by today EOD, which is late evening, because this calculation is done for the last 3 days. The gold price averaging is done of the last 3 days. Okay. Additional 50 rupees discount you will get on this product. Suppose the price is 5,600, then the price for the retail investor will be 5,550 rupees. Additional 50 rupees discount you get on your online purchase. You as an HDFC security customer, you have total KYC done at our end. POA and everything is in place. Then you just have to visit. On your HDFC. If you are buying through your retail, this you are buying on your own, then you can just log into your ITS or your mobile app. This is available on your mobile app itself. If you are calling your RM, then they will also place your order on your behalf. So it is this under section IPO. This SGB will be live. You just have to click on the SGB. You have to put your gram, whichever gram you want to invest. Suppose 10 grams, you have to select 10 grams. The price will be quoted auto because there is only one single price which you have to select. And then you can place the order. Your order will be placed. The window is open from 11 till 15. In this 5 days, you can do the investment. Okay. You get an additional 2.5 per annum interest, which is paid half yearly, which means 1.25, 1.25 you will get every 6 months. Right now, the series which already is listed on the secondary market or you have bought it in the primary market, you are getting the interest by default. In this, government is not going to get default you for paying your interest because they are paying interest at every 6 months, and for every series they have a particular different rate which is fixed. Okay. Second, the interest which you get 2.5 per annum, it is taxable, and it is taxable as per your income tax slab. Okay. Second thing is that the taxability in the primary market, whenever you buy, this is the main feature. You should understand this very clear, because there is a very much confusion, because we have a query which we receive from the client. If any client who is purchasing from the primary market, okay, suppose in the series 2 you are buying, after 8 years, if it is getting auto redeem, after maturity it is getting auto redeem, because you don't have to submit any documentation, it is going to get redeem auto. Then at that time the rate will be linked with gold. Suppose today is 5,000 and tomorrow it will be 20,000, the gold rate after 8 years. Then the difference of 15,000 rupees will be capital gain exempted. Today you're buying at the rate of 5,000, and way forward after 8 years you are holding this units in your demat account and it is going to get auto redeem, then it is capital gain exempted. Every the profit which you have earned, it you will not be paying any tax on that. Okay. But suppose you're going to redeem, you are in need of money and you are redeeming in the secondary market. The secondary market rate is linked with purely demand, supply and liquidity. That particular person, if he is redeeming below 3 years, it is short. After it is long term. If you are redeeming below 3 years, it will be counted as a short term. In that case, customer will be taxed as per your income tax slab. And if it is more than 3 years, then it is long term, and it is 20% inclusive taxation. Okay. So I will just repeat, because you won't be able to get this. Any customer who is investing this product in the primary market, okay, this is purely about the capital gain which you get it. Primary purchase and auto redeem after 8 years, because this product tenure is 8 years. After 8 years, if you're going to exit, then have earned, you will get a capital gain exemption on that. If this particular product you are redeeming in the secondary market, if you are in need of money, because from the day one, once it is listed, you will be able to exit. You don't have a capping of holding it till particular. Suppose after 1 year you have to hold for 1 year. No, in this there is no clause as now. You, from the day one it is listed, and if it is listed, you are redeeming short term, because
Sorry to interrupt, Anjali. There's some disturbance in the line.
Yeah.
We couldn't hear you properly. Could you just repeat?
I'll just repeat. Investing in this product in the primary is which is on 11 is purchasing, and it is going to get auto redeem after 8 years, because this particular product is 8. And in 8 years, if suppose customer is not redeeming in the secondary market, auto redeem, then the profit which he earns, it is capital gain exemption. You don't have to pay any taxes. But suppose this customer is in the need of money and he is redeeming in the secondary market, because in the secondary market there is no capping that you have to hold it till 1 year or 2 year maximum. From the day one, from the day one you can do the exit. Okay. And it will be as per short term and long term. If it is less than 3 years, then it is short term, and if it is long term, it is more than 3 years. Short term, if you are selling after 1 year in the secondary market, the rate is linked with market, demand and supply and liquidities. It is totally dependent on that. It is not linked with gold. Maturity is linked with gold. Purchase in the primary market is linked in gold, but in the secondary market purchase, it is purely secondary market buy and sell, the demand and supply and the liquidity. After 3 years, if you are exiting, then it is long term, which is 20% inclusive indexation, it will be counted. This particular product is tradable in the market from the day one. You can transfer this as you do the transfer in anybody's name. If you're holding in the demat, you can still transfer in your sister's name or in your wife's name or your children's name. You can transfer, but it is the capital gain exemption, the criteria. It is you're going to lose that if you're going to transfer in somebody else's name. Okay, whether it is offline transfer or it is secondary market you're transferring. This particular product gets capital gain exemption only for the primary holder who has purchased in the primary market, and he is going to hold till 8 years, and it is going to get auto redeem. Then you will get the capital gain exemption benefit. Otherwise, no. You can get this as a product. You can keep it as a collateral. The HDFC Bank provide a provision where you can have a collateral for this bond. You can keep as a collateral and you can get the amount of that. There is an additional interest which you need to pay at that time. The rate of interest depend upon the particular series which you are buying and selling. They will quote you the rate of interest which additional you have to pay. Okay, if you approach HDFC Bank, the nearest bank, you will be able to get all the basic detail about if you're going to keep it as a collateral. If you're in need of money, you don't have to sell it in the secondary market because you're not getting a good rate which you are expecting, then you can keep a collateral. Basic key features about this product. See, as an investor, you should hold this product in your portfolio. Why? Because you have seen up and down in the secondary market, which you're buying in the equity stock market. So to balance your portfolio, you need to have a gold as a product, because to beat inflation, at the time of inflation, when equity market is not performing, gold is going to give you the benefit. Okay, if at the time of inflation and the time when the equity is not performing and if you need money, then gold rate are obviously high. At that time, you can sell it off and you can get the particularly the benefit out of your investment which you're investing. So to diversify your portfolio, you should have a gold as a product in your portfolio. It is not that you have to put your 50% or your 100% in that, but as per your risk appetite which you have, you should invest in this product, because it is ultimately going to give you an additional benefit. And I'll just list down what are the benefits which you're going to get. The interest rate which you get, which you don't get in the physical gold. Okay. Secondly, if you will see the secondary, you will get amount appreciation, because the gold which you are buying, you have seen the gold. I have never seen in my life that it is going to get depreciated. It is a slow growth in that, but you are going to get an appreciation as a gold. Okay, that if you hold till long term, it is not a short term product, it is a long term product which you're going to keep it. It is backed by sovereign. Okay, ultimately you're going to buy this product which is 999 rated, but in the physical gold there is a purity mark, question mark is there. Okay. Secondly, interest you don't get on the physical gold, but in the sovereign gold bond, you get the interest of 2.5, which right now also, if you have a gold as a physical form, you're not getting any benefit out of that. Okay. And as an investor also, if you are buying a physical gold, we never go and sell it off in the market. Okay. But if you have this product in the digital form, some or the other way, you can use this amount in for further investments. Like you have a daughter's marriage, if your education is there for a kids, if you have a long-term holding capacity, then you can invest in this product. Okay. Second thing is that no maintenance charges you have to pay. Okay. You don't have to have a locker for this. If you buy a physical gold, right now all the investors who are investing in this gold as a product, as a physical, they don't keep at home. They some or the other way, they have a locker system in their bank which they add, and they invest in this product and they park this physical gold to their locker. You have to pay annual charges for the locker. Okay. Second, the making charge which you pay at the time of making the physical gold, but in this you don't have to pay any making charge. GST in this, if you're buying in the primary market, the sovereign gold loan, you don't have to pay any GST. But similarly, if you're buying the physical gold, you have a proper documentation, you have to file things, you will have to pay GST. Okay. In my presentation, you have seen one criteria of 5 years holding this physical form. all customer who is buying in the physical form or the digital mode, if they are willing to sell after 5 years with the gold rate, because government gives an opportunity to investor to redeem after 5 years, particularly at that time if the gold rate is 10,000 and in the secondary market it is 9,900 or 9,500, but you can redeem in the primary market itself, where the government is going to buy from you. At that time you can redeem after 5th year. The rate which is quoted is linked with gold, okay, but the 5th year criteria is only for customer who wants to willingly, who wants to sell it off after 5 years, and which is going to link with the gold rate, not for the investor who wants to buy and sell in the market, in the trading market, because from the day one they can buy and sell. But in the physical mode, if you're having, you have to convert from the physical to demat, and then you should have a trading account to sell it off in the secondary market. Okay, tradability, it is there, liquidity is less but it is tradable, and liquidity is there now in the market. Okay, earlier there was an issue with the tradability, but you can tradable, you can trade this. Okay, there is no though you can exclude the risk of storage. Okay, if you're holding it, there is no risk because it is purely in the demat mode. So this is to round off of this about this product. As an investor, to beat inflation, you should have a sovereign gold bond as a product in your investment portfolio. Secondly, the additional benefit which you get, the capital gain and exemption, the interest rate which you get, the GST which you don't need to pay, the purity which you don't have to look in. So these are the basic things which you need to understand about this product, that this is the best product as an gold investment for an investor. Okay. And as an investment also, if you're buying in the physical mode, why not in the digital mode, where you can buy it hassle free at one click? You don't have to visit any store, you don't have to pay any making charges. Okay, so this is all basic about this product. If any additional queries which you have, you can drop down, you can just write it down in the question this tab, and we will answer each and every now. We are open for the question FAQ rounds. If any investor has any queries, we can take it up right now.
Yes, Anjali, let's wait for some time.
There is one query. The opening upcoming series. The upcoming series is from 11th September till 15th September. It is open. You can invest this in this product. The rates will be out by today EOD. You will be communicated by tomorrow itself. Okay. You will receive a mailer from HDFC Security about the all the details about this product, the rates and the discounts.
Anjali, there is one more question. Is the gold sovereign bond is available to buy at any time?
The sovereign gold bond in the primary market, it is not available anytime. Government is providing you the prior notice that we will be opening this window for, but suppose like for the say first 6 months, it was in the June month and now it is in the month of September, which is from 11 till 15, the window will be open. But yes, you can invest in the secondary market. It is available, the old issues which are already listed in the secondary market. At any given point of time, you can buy and sell subjected to liquidity.
There's one more question. While selling after 5 years, the government buying it at market rate or something? It's not clear actually.
Yeah, after 5 years, the rates which is quoted, it is linked with the gold price. Government is linking with the gold price, not with the secondary market. In secondary market, is purely depending on the demand supply which is quoted. But after fifth year rate, which government is quoting, it is purely the linked with gold. As you are going to get redemption after 5 years, the same logic. This option is available online through mobile app also you can do it. And as an investor is asking how we can buy it through website, HDFC Securities website. If you will log in your trading platform, the ITS, if you're going to log in under IPO section, this product will be available. You just have to apply. You have to put the gram which you how much you have to invest. The rate will be captured automatically and you have to just proceed. Same way you can do through mobile also. Under mobile section also, under IPO section, this will be available.
Okay, there's one more question on capital gains on bonds.
So the capital gain which arises if you sell it off in the secondary market, suppose it is less than 3 years, if you are selling off, it is short term. It is going to tax as per your income tax law. If you're selling in the secondary market before your maturity after 3 years long term, it is 20% inclusive indexation. Any customer buying in the primary market holding till 8 years, okay, 8 years, after 8 years it is going to get auto redeem. At that time, the capital, the profit which arises, it is tax exempted, which is capital gain exempted. Okay. Only for those investors who are investing in the primary market and they are not transferring to anybody in this particular 8 years span. He himself hold is for the 8 years, auto redeem, then he get a capital gain exemption.
Okay, there's one more question. Somebody is saying if we have purchased in secondary market and held till maturity, then what?
No, for them, there is no capital gain exemption. This exemption criteria is only for the lock-in for 8 years. Because you have took this product in the secondary market, you have bought this in the secondary market, and you are not fulfilling the criteria of 8 years lock-in. Okay, this product is only for those customer who is buying in the primary market and holding till 8 years, they only get the capital gain exemption. You will be taxed as per your short-term and long-term criteria. Okay.
Sheetal Nayak has told you to just explain the primary. Can you please explain primary and secondary market with respect to SGB because network was not proper, so they couldn't hear properly.
In the primary market and SGB, there is two difference in the market. If you buy it in the primary market and the secondary market, number one is when you buy primary purchase, okay? In primary purchase, you buy and hold till 8 years. Suppose it is 5,000 rate which you are quoting right now. And the redemption time, it is 5,000. Suppose it is 20,000. The 15,000 profit which you get, it is capital gain exempted. This is the main features of buying in the primary market. In secondary market, the rate which we will get for the earlier series which is already issued and they are listed in the secondary market, that rate will be purely on the demand and supply. Okay, the liquidity and the demand and supply, the buyer and seller, it is purely dependent on that. The rate is dependent on that. So it is up to customer. If customer is not willing to buy in the primary market, they don't have a capacity to hold till 8 years, then they can buy it in the secondary market, the older rates, which is already listed, which will be not linked with the gold, which will be linked with the secondary market rate. Primary purchase benefit customer definitely get. Why? Because the primary purchase, the rate which is there, it is already 50 rupees discounted as compared to the physical gold, the rate which is there at that particular time. Okay, so in primary and secondary, there is difference of capital gain exemption. Otherwise, interest you get in the primary market also, and if you buy it in the secondary market, the rate of interest 2.5 per annum which you get in the secondary market also you get it. But the benefit of capital gain exemption you will lose out if you buy it in the secondary market.
Okay, there's one more question from Anju Srivastava. She's saying that she has invested in gold bond uh, in the past, but she cannot see it in the bank portfolio. Where should they be?
If you have bought it through HDFC Security through your trading terminal, then it will reflect under demat reconciliation. If you log into HDFC Securities account, you have to manually add in your portfolio. And the second option which you get by default, which is from the HDFC net banking through the demat mode, the demat holding statement, if you remove, in that it will be reflecting. If you have any such query, you can just approach your contact your RM. He will address all the query because he is well versed with the query which you're going to raise, and he will just identify your transaction where it is parked and he will show it to you. But it is ultimately going to get reflected under demat reconciliation through HDFC Securities portal, and through HDFC Bank it is under demat demat statement.
Next question is any tax deduction at the time of selling?
At the time of selling, you are going to quote the rate which you are going to get. You have to buy at the sell at that rate, and as per your income tax slab, it will be counted. Okay, it is not TDS is not deducted at the time of buy or sell. It is as per your income tax slab how you're going to show it. If it is less than 3 years, then as per your income tax slab. More than 3 years, it is 20% indexation. Your CA will calculate and give it to you the calculation and everything. According to that, you can file your tax.
Next is where is the option available in website to buy the bonds?
The primary market, when this product will be live from the 11th onward, the Monday to Friday, it will be available under IPO section. Under IPO section, SGB Sovereign Gold Bond Series 2, it will be available. You just have to proceed by applying. Your grams you need to put, and then you have to proceed for your confirmation that you have already executed the this SGB. It will be under IPO section whether you go from ITS or you go from your mobile app.
Okay, there's one more question. Is it possible to get loan on the digital gold? If yes, then
Yes, if you invest in
do all
SGB,
banks issue the loan?
yeah, there is a provision to you can take a keep this bond as a collateral with bank. Okay, so HDFC Bank is providing you the provision. You are holding in the demat mode. You just have to approach them that you need to keep this as a collateral. Accordingly, they will guide you the this. But as a product, you can keep as a collateral.
I think rest all are repeated questions. Okay, thank you so much, Anjali, for the beautiful session. I'm sure the audience was very much
Thank you so much.
like we all came to know more details about SGB. Thank you so much for the session.
Thank you all for joining.